Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin. We're going to be looking at the move that we've been continuing to watch for the last several months. So go ahead and subscribe to the channel if you guys like the content. We're going to be looking at a few different graphs in today's video. And also check out the premium list and the Telegram channel, which you can find a link to in the description below if you want access to those features. So let's go ahead and jump in. So we've been watching this move for a while, and of course you'll see people draw the line here showing the general trend line, and it does seem like if you were to go based on some of the trend lines drawn a few weeks ago, we would have already broken out of that. I mean, you can see even drawing it like that, where we're encompassing the top of this candle here and then the top of this candle here, we've already started to poke through that imaginary line. Now, one of the things we're going to talk about in this video, though, also is looking at longer time frames to try to get a different sense of where price is and where we're headed in terms of lengthening cycles, etc. So first, let's go ahead and look at this chart. So this chart is pretty similar to what we've seen before. But we were talking recently about these for Ethereum, so I wanted to go ahead and talk about them with respect to Bitcoin too. So one of them is looking at the monthly candles. So the monthly candles are fairly interesting because they do a better job of the weekly candles in terms of getting rid of all the noise in the market. And we say one of the best ways to get rid of the noise is just to remove the price from the picture and then just to look at the moving averages. But with the price on there, the blue line here is the 20-month moving average, and the yellow line is the 50-month moving average. Now, the 50-month moving average, let's say about 30 days per month, is about 1,500 days. So 1,400 days would be the 200-week moving average, because 200 times 7 for 7 days in a week is 1,400 days. So this is pretty close to the 200-week moving average. It's the 50-month moving average, which is 100 days more than the 200-week. But ultimately what we're just showing here is a longer time frame. In the same way that we look at, say, like the 20-day, the 50-day, the 100-day, the 200-day, and we look at the 50-week, the 20-week, the 100-week, and the 200-week. Here we're looking at the 20-month and the 50-month. And again, these are somewhat arbitrary, but at least they can help you try to better identify trends. One of the things I thought was interesting, though, is if you look at the 20-month trend, if you take, say, let's say we were to take a measured move, okay? So let's take a measured move from when we broke the 20-month to then when we bottomed, basically. So we'll go to the candle bottom, not the actual wick. So it's around 50% or so. And then in this cycle again, once we broke the 20-month, we bottomed again at around the 50-month, which again, if you go to the body of the candle, not to the wick, is around 50%. So we have 49% and 48%. One of the things that's interesting though about this is, in terms of looking at these monthly candles, what do you notice? So you notice that we had our capitulation over here in this cycle, and we had it again here. The recent capitulation we had in March barely even shows up on this graph, and the reason is because it happened so quickly. We dropped down to 3,800, and then we rebounded right back to 5,500 that very day. So this phase of the market cycle here looks a lot different than the one down here. And again, this area tends to mimic what went on over here. And this wick here, I mean, the entire move from 6K down to 3,800 is nothing but a wick on the monthly chart, which I think is pretty informative, and it reiterates the fact that you should not invest more than you can afford to lose, because if you do, if you expose yourself to the market more than you can bear, in a sense that you're, if the prices drop, you're not going to be able to pay your rent. Therefore, this is not likely the market for you. You need to first assess the things that you have to cover in terms of your finances before entering a market that is super volatile. Now, this is not financial advice on this channel. We just look at market data to try to identify these longer term trends. I'm just trying to give people some perspective. If wicks like this are going to scare you out of the market and say, okay, Bitcoin's going to zero, then it might not be the right market for you. But if you can stomach these moves, then I think if you look at the longer time frame, I think you're going to be in for a treat. And I want to continue to talk about that in terms of, say, the lengthening cycles. I would like to remind you guys that if you guys like the content and want access to the premium list, so you want access to premium videos, so if you guys like what I'm doing on the public channel, you can imagine that the videos I provide for the premium subscribers are, I put a lot more work into them and they take a lot more time. So if you want access to that, just join the premium list at intothecryptoverse.com. You can find a link to it in the description below, and you get a weekly report, a weekly premium video, and access to a Google Sheets dashboard with all sorts of information like live updated risk metrics, and even recently we've added on the ability to, you can essentially put in what your projected Bitcoin peak would be, and then it shows you various selling strategies during the market cycle so that you can then find one that fits your own risk-reward ratio, or your risk-reward tolerance that you have. So I think that's pretty neat. So I would love to have you join. Once you join, you'll get a welcome email, and it'll take you to all the former reports and all the prior videos, as well as the Google Sheets dashboard. So let's keep chugging along. One of the things I wanted to talk about here is let's look at trend angles. So the first thing we're going to do is just look at the downtrend. So if we were to take, and we're going to do this from the moving average, the 50-week moving average. We're not looking at price. So let's take it from the peak to the bottom. Okay, so this is around a negative 38%, or sorry, negative 38 degrees, not percent. Negative 38 degrees. So peak here to the bottom, negative 26. And then peak here to the bottom is around negative 25 or so. So you can see that this bear market and this bear market have actually been fairly similar in terms of their, say, like the rate of their drop. Now, I think what's more interesting though is we're going to take a look here at the trend angles, but the ones that move up. And I think this is more interesting, and I think it kind of provides some perspective into projecting the next peak. Because the bear market, this bear market was fairly similar to this one, but the rate at which we move up from this bear market was vastly different than the one that came after. So again, let's draw some angles. So we're going to go from the bottom to the peak. So that's around 51 degrees. Again, we're going to go from around the bottom to the peak. So that's around 35 degrees. So it's a pretty significant drop from, say, the bottom to the peak in terms of the 50-week moving average. Now, you'll know that this price here, or the 50-week moving average, does not correspond to the actual peak price, because the peak price happened well before. But it is somewhat interesting to see how lower the angle was, in terms of it took us a lot longer to get to the next cycle peak. Now we're going to take another move, but this time we're going to take it from the bottom here, and let's go out to, say, 2023, which is when we think it's going to happen. So this is when we think on the channel that we're going to see a projected move. And I think we've also said that around somewhere between 1 to 200,000, probably closer to 100,000 than 200,000 will be our next peak. So let's just put it at, say, 138,000. You can see that it kind of follows this trend of it taking longer and longer in order to reach that. Now, you should remember, though, that this is the 50-week moving average, and it does occur after the actual price peak. So we might want to extend this out until, say, 2024 or thereabouts, because that's when ultimately the price is going to peak. And again, it won't peak at $100,000. So let's drop it down a little bit, because it's obviously not going to get all the way there. Not the 50-week moving average won't get to $100,000. But even if we were to do something like this, where the 50-week moving average goes to $50,000 by July or May of 2024, you can see that our angle is continuing to decrease in a trend that's consistent with what we've seen. Now, I get that this is really arbitrary, but I just thought it was interesting to another perspective, in a sense. Instead of just drawing, say, the bottom to the absolute peak, let's draw the bottom of the average to the peak of the average, so that you can actually look at, say, the general price trend over weeks and months, rather than just looking at an absolute peak and then basing all of your conclusions off that single peak, if that makes sense. The last thing I wanted to talk about is just, I just quickly made this chart. I don't really know how relevant it is, but I thought it might be interesting for some people. So it's just the price of Bitcoin versus time, and I've plotted on there the 7-day standard deviation. So it just takes into account the preceding 7 days, and it uses that as a standard deviation on that day. Clearly, I could manipulate it in a lot of different ways by looking forward and backwards in terms of taking the standard deviation. But I just wanted to show you guys, that even taking the 7-day standard deviation, the standard deviation, and this is one standard deviation, where we bottomed in March, is above $6,000. So this was how quickly that crash happened. Because we really didn't drop. The peaks of these didn't really drop below 6,000. I mean, of course, the first one's going to be above 6,000 because, well, it's taking into account some of this data. But as we continue to move forward, the standard deviation is still relatively, high. It goes up over 6,000, which is interesting considering that the price was around $3,800 at one point. So it happened very quickly. If you continue on, this would be the 14-day standard deviation, and you can see it only gets more amplified. And then this is the 30-day standard deviation. So you can see that we have a clustering here. We have this clustering over here. So price was clustered in this area in February, essentially. And then in the, from middle of March to the middle of April, we had a cluster here. So cluster and then kind of a breakdown, cluster and then a break up, and now we're in another cluster. So the question, right, that everyone is waiting for, and we've talked about on the channel, is we're probably not going to stay around 9,500 very long. And right now, actually, the price is, I think, closer to 9,800. But the question is which way are we going to go? Are we going to, to spring upwards and maybe create another cluster in say the $12,000 to $13,000 price region, or are we going to retrace and come back down to this region? And my advice to you is just be prepared for whatever happens. If you see the price go up, then you might want to have a plan in terms of if you wanted to take profits. And again, if you want to help with that plan, I do have a plan on the premium list, so check that out at intothecryptoverse.com. But on the other hand, if we drop down, you're going to want some capital sitting on the sidelines to take advantage of that move, because you've even seen how short these periods can be. You only had a few days to purchase Bitcoin at a price lower than $6,000 in this last drop. So if it happens again, you're going to see people saying that, oh, Bitcoin's going to zero, it's going to go back down to $1,800. Again, this is it's most likely noise. I'm not saying it can't happen, but again, you'll see this every single market cycle. There's also the chance, and the very likely chance, that we move up from here into the summer, just like we did last summer, and then maybe in the fall or winter we cool off again. Before trying to really build up momentum to $20,000 in 2021, and this is kind of where I could see, I could see things going that way. But again, it's what my guesses are, have nothing to do with what I do. I just stick to the risk metric. So if you guys like the content, again, check out the Telegram channel. You can see it here. Here's the link to it. You can find the link in the description below if you want to talk about the charts. If you want access to the premium list, check out the website intothecryptoverse.com. And at the very least, if you guys like the approach that I provide on the channel with some custom analysis and whatnot, please go ahead and subscribe. I'd love to have you see you in the future, so you can tune into future videos and just see updates on the market. So thanks for tuning in. I'll see you guys next time. Bye.